Please welcome Michael Fitzgerald, Sealant, Darius Jones, USAA, Leanne Kemp, Everledger, Jennifer Rutley, Mass Mutual, and Micah Winkelspecht, GEM.
Great. Well, hello, everyone. I am so pleased to see so many people here to talk about insurance. My name's Mike Fitzgerald. I work with a research company called Sealant. I've been in insurance for a couple of years, and today we're going to talk about the new opportunities that are in insurance. And I'm going to cue that up in just a minute, but enough about me. What I want to do is, can we bring the lights up just a second? So this is the painful part. This is your audience participation, but it won't be too bad. At the end, we'll have Q&A, and that'll also be audience participation. But I need to be able to see Mike out. I need a show of hands for everybody who is in the business of insurance. If you're an underwriter, a claims rep, a loss control rep, run a P&L up high. We've got like 4 people. Okay.
No one wants to admit it.
Yes. All right. What about in IT and insurance? How many IT people do we have in insurance? Oh, we got 6 people. All right. That's good. And how many people are not in insurance at all? All right. Okay. So now we know how to key our comments. Well, this is going to be a fun session. So I'm going to tee it up, and then we're going to go through, and the panelists are going to talk about what they're doing with blockchain in their various organizations. But first, at the very highest level, think about insurance, not about your own personal insurance, but the product generally. And what is it? When we try to bring it up to the highest level, it's a promise to pay. So for the lawyers in the room, we need to hear you loud and clear. A promise in legal terms is a obligation or a contract. Okay, so number 1, blockchain. Number 2, there are a lot of people involved in insurance at different times. They're generally, a lot of them are certified or else they're approved. So they come in and out of the value chain at different times. The third piece is that insurance actually is an intangible asset, and to date has really been paper-driven. So it's intangible, so you can't see it or feel it, but you do use it. So that's the other use case that really fits with insurance at the very highest level. So what we're going to do today is we're going to talk about how that overall, an overarching definition of insurance is a promise to pay used by many different actors at various times in an intangible product actually fits the blockchain very well. So the way we're going to kick this off is actually go down, start with Darius here on my right, and go down, if you could introduce yourself, and then if you could tell everyone how you describe the use of blockchain, Bitcoin, any of the technologies we're here to talk about to your business executives and all the people that you're trying to influence in your firm.
Great. Kind of a easy subject, tough answer. So can anyone hear me?
Okay. There we go. Just had to give it a tap. So great subject. USAA, we're kind of structured very similar to most of you, with one challenge. So we have 4 distinct lines of business: an insurance company, a bank, a life insurance company, and then our investment group. And so my conversation has to be very uniform as the enterprise innovation lead focused on digital and blockchain. It has to be very uniform with all 4 lines of business, and we really start from where that promise starts. So the acquisition of assets, whether or not you're purchasing a home, purchasing a car, we know that at least some of those things have disruption on the horizon. The way you purchase a car today, you purchase a vehicle for yourself, and it's relatively easy to insure a vehicle that's owned by a single party. But as we all know, recent times, Ford and others have announced partial ownership situations. And so how do you insure? First, how do you pay for a vehicle like that? Who owns it? How is it divided amongst peers? All have a purchasing kind of aspect to it. And then after that, how do you insure a vehicle that's partially owned by multiple parties? And so once we take it from that aspect, everyone sees that everything changes if any of these business models persist. About a year ago, we announced that we were supporting drivers on Uber with a product. Well, that's a conditional promise. I have one condition when you're using the vehicle for personal use. I have another condition when you're using the vehicle for business services. And so, once again, another potential opportunity for blockchain. And then the last piece that we always speak to back to that promise is, how do you make it easy to prove that you are entitled to that service? And that just seems like a natural fit. And so those are some of the themes. When we bring it up a high level, it's how do we combine the concepts of identity and value, and then how do we automate the process of keeping that promise for that combined asset?
So is your pitch to the executives, Darius, more a value type, different way of doing business, or is it more an efficiency play?
It's, I'll say 2/3, 1/3.
Okay.
So 2/3 is really focused on creating new business models and remaining relevant during disruption. And then the last piece is efficiency.
Okay, great. Leanne?
So my name's Leanne. I'm the founder of Everledger, and can everyone hear me? Is it another? Yeah? Okay, good. We've been focused on the reduction of fraud and identifying provenance as a key to understanding, firstly, from an insurer's perspective, what they're insuring, and secondly, if there is provenance is broken, then how does that interact with risk? And so for the last year, we've been focused with a number of insurers in understanding how that can be applied, because often fraud has now become just a cost of doing business. So to use transparency, and particularly in the diamond industry where it's opaque, we have the ability to prove the fundamentals of not only just this technology, but how this could be used to reduce fraud in markets. And insurance is one particular use case.
So when you talk to executives, you mainly talk from the standpoint of reducing fraud, or how do you try to explain the opportunity?
So the opportunity is very easy to explain. Proof of ownership is broken. The claims process often happens after the event. Proof of ownership happens after the event. And really, the insurers have very little idea exactly what object they're physically covering. So these problems are huge and substantive, particularly in items where provenance and value are linked together. So diamonds is one, art is another, and high net worth is often the blind spot when it comes to fraud. So to be able to explain it to insurers is very simple, because we have transparency and risk that are intrinsically combined, and of course insurers understand risk. It's their entire business. So if you can bring transparency to an opaque market, or transparency to an opaque process, then of course risk reduces just through virtue of the fact that you're now standing in the spotlight.
Great, thank you. Jennifer?
Hi, I'm Jennifer Rutley. I am with MassMutual Financial Group and head up our technology innovation team. We've started looking at blockchain towards the end of last year, so still really new to the space. But I think the thing that seems to resonate, so MassMutual is a 165-year-old company. We've been around a long time, and I think what tends to resonate with at least something that, again, has that kind of age to it is efficiency. And how do we look at the technology that can help to really accelerate a lot of the settlements that we have, a lot of the manual processes that are in place today that take a tremendous amount of time and effort. So really going there first, I think, with executives helps, because that's a lot of the pain points that we deal with today. And because we look at alternative models and all of the money that's going into fintech right now, there is also, I think, a big appetite with senior execs to understand what some of the disruptions might be in the future and how to either leapfrog or look for ways to continue to innovate to really deal with that. Because MassMutual is heavily in the life space, we haven't seen as much disruption as some of the property and casualty examples that are out there, but I think we know it's coming. So how do we make sure we're really thinking about some of these technologies, and blockchain being a big one, that could really make a difference in how we do pretty much all of our fundamentals around insurance. So
it sounds like a bit of carrot and stick. Carrot, I can make you more efficient. and stick. You don't want to miss out, kind of to Darius's point on the disruption.
Yeah, no, I think that's really true. Yeah.
Excellent. Excellent. Mike?
I'm Micah Winkelspect. I'm the CEO and founder of GEM, and so we're looking at a lot of areas of insurance, but specifically we've been really interested in the medical industry, and we just launched GEM Health, which was a big healthcare initiative for blockchain. So, one of the things that sort of common to all insurance processes is that it involves many different companies trying to coordinate a workflow. And that workflow involves the movement of a lot of data, and oftentimes that data is extremely sensitive. So especially in the medical industry where you're moving around, literally patient records and very private information about that patient, but it applies to a lot of other industries as well. So we're working with companies to help develop a process that can essentially maintain security and integrity of underlying data for insurance claims to reduce the amount of time that it takes to go through the adjudication and reconciliation process. Actually, our goal is to eliminate reconciliation entirely. So, I was kind of shocked talking to a medical provider who estimated that there was about 4.2 million people in the United States alone that are employed in the business of reconciling medical claims. And that literally means, matching up paperwork between claims, remittance advices, and ACH payments from the banks to try to compile all that information into one single story of a claim. And it's just terribly inefficient. So we're looking to make it a lot more efficient.
Jennifer, you were nodding your head there. I've had my
Yep.
experience.
Yeah, I think the claims process is extremely manual, and again, I think for us, for a life insurance company, some of the paperwork we have are people that bought their products 80 years ago. So you can imagine what their applications look like 80 years ago, right? So all of that is still very, very antiquated.
And I was shocked to find out that almost all medical claims are still submitted via FTP, so they're not even using API connections. They're still using, very insecure technology that was created quite a long time ago. So they're way behind.
Absolutely. So, Leanne, you know a little bit about reconciliation across different entities when you're trying to figure out the provenance of a particular diamond stone. So we've heard, within a company you have these armies of people in insurance that are trying to figure out, what set of facts should we deal with. But talk a little bit about your efforts in trying to bring a network together to try to do reconciliation, really figure out what the truth is and what those challenges are.
We've been faced with some interesting challenges, particularly in the diamond industry. In the 1950s, GE created synthetic diamonds, which of course have been used for industrial purposes, but within the last number of years, we've seen the onset of these synthetic stones now being gem quality. And that's, of course, caused large concerns throughout the pipeline as these synthetic stones are peppering the supply chain. And now we've seen them proliferate into open marketplaces and being available and sold into consumer networks. More recently, Alibaba, of course, had 10,000 carats of synthetic stones being sold with GIA or genuine certificates. So a lot of the problems that we have is not just being able to face the paper-laden process and the burden of many people along the pipeline, but we now have to identify the underlying authenticity of the object. So it's not just about efficiency in supply chain or paper processes, it's now actually bringing some sort of authenticity and transparency around the object. And how do we do that? It's beyond just using a distributed ledger. We have to then dig very deeply into machine learning and using algorithms to be able to identify those stones and the attributes of those stones. So often than not, insurance is really binded on the promise on a piece of paper, and what goes alongside that piece of paper, the insurer doesn't necessarily see the physical object. So it's very difficult to really know what the insurer is actually insuring at the point of its inception of policy. And it's more often than not that they probably will never ever cite the object. So with the onset of technology, not just limited to blockchain, we have the ability now to apply a number of emerging disciplines so that the insurer does become fully and wholly educated at the time that the policy occurs or even at the time that the claim happens.
How do you keep the incentives aligned among all those different players, or is it just the fraud, the elimination of fraud? Is that strong enough?
It's interesting because when you really think about, and we're doing a lot of work in art, but I'll limit the conversation at the moment to diamonds. The industry is 150 years old, and the majority of the people in industry have been asking for permission and forgiveness since 1888, of course. But the industry stacks a 500% value. Diamonds go through one iterative manufacturing step. It goes from a rough-cut diamond to a polished stone in one iterative step. Yet rough comes out of the ground at $15 billion, and by the time it hits the retail network, it's $80 billion, 500% value. When you think about synthetics being gem quality standards, the reality is that's undermining the entire profitability of the industry and the authenticity and the trust and the reputation of this industry at large. So if it was not for synthetics, the proliferation of fraud, we've got the onset of nanotechnology now and sensors, I think we're in kind of a perfect storm. And this industry more than ever wants to have transparency. I mean, we're a non-financial use case of the blockchain in a self-regulated market, and that market wants to stay self-regulated. So we're seeing that the perfect storm of problems are occurring, and we happen to be able to bring a set of technologies in to be able to solve those problems.
Yeah, it sounds very powerful. We're going to switch gears just a minute here. One of the things that I didn't mention in my opening about insurance is it's regulated. So what does the regulation environment, or what could the regulation environment offer in terms of both opportunity as well as challenges in dealing with blockchain type of solutions in insurance? And Darius, to start there, I'm sure that you've probably run into a little bit of constraints around regulation before, but what is it about blockchain that's either good, or how are you guys viewing that either now or in the future as a challenge or an opportunity?
Yeah, whether I speak to the insurance part of our business or the banking part of our business, regulation's unclear, and that's the big challenge. In the banking and kind of investment space, can you treat a digital currency as an asset is a big question that we've yet to have a conclusion on. On the insurance side, what does immutable truly mean, right? And so there's the big question mark as to whether or not blockchain is truly immutable. And I think until that is answered, first and foremost, we're always in the speculative area as to whether or not we can trust the blockchain. Now, from a technology standpoint, I think everyone's comfortable, but until the regulators are clearly comfortable with that answer, I think we'll have a continuous challenge as to whether or not we can trust what we write to a blockchain.
Interesting, very interesting. And what would you say a possible strategy is for either communicating with the regulators or helping them get comfortable, or, if you were going to try to address that proactively, what might you do?
I think it's a typical 3-year journey. So part of this is having patience, and I know, I've come in and out of traditional business and fintech twice, or I'll just say technology twice, and the pace in which most of you play is not the same pace in which the industry plays. And so part of this is persistence, and the other part is patience. And when you don't have those two components in this industry, what happens is this industry pushes back. And so instead of taking, 24 to 36 months to get where we want to be, it takes us, 48 to 70 months to get there. And so I encourage you all to exercise persistence first, and to strengthen your patience with this industry. We have to push, but we also have to know, to your point, 100 plus years of being in business, either regulated or self-regulated, is really a difficult thing to undo at times.
So one of the ways to understand that I'd offer for folks in the audience that want to pursue that a little more is to get with an industry veteran and talk about in personal lines or commercial lines, but particularly personal lines insurance, and just say the words credit score and regulator, and then let them just talk to you for about a half an hour, because I think exactly what you said as far as the pushback. That was one of the early ways that technology really tried to influence insurance in a very, very fundamental way. And depending on where you live, depended on what the feedback was from the regulator, either positive or negative.
I'll give you a non-blockchain example. So I work for the company who was one of the first to allow mobile deposit from a mobile device, so depositing your check from its initial concept to allowance was several years. And so, part of it was persistence, and the second part was patience.
Yeah, definitely. And Micah, in terms of the health insurance world and HIPAA, and you mentioned privacy and security, it seems that this conversation is similar to the conversation the insurance industry is having around cloud technology, where the technology can actually offer a greater level of security, a greater level of control than currently exists, but it is a different environment. So can you spend a little bit of time going a little deeper from the regulator standpoint and the HIPAA and the privacy pieces of how you guys try to solve that with your solution?
Sure. So I think, one thing to note about regulation in general is that we heard the same thing when the financial industry started entering the blockchain space, that regulators would never approve this. And the reality is that there's been a lot of work that's been done to educate and communicate with regulators, and now they're a regular part of the discussion. And so I don't see it as any different in this industry or any other. It's a matter of including regulators in the discussion and really providing good education. And it does take quite a long time, and we're still not through it. So it's going to be a journey. In terms of HIPAA specifically, I think HIPAA is interesting because unlike a lot of regulations, say in the banking industry, which are designed to, say, prevent money laundering or to prevent total system collapse, or what have you, in HIPAA, the real goal is to protect the patient and to create strong privacy around patient data. And I don't know of a better technology that provides privacy to individuals than blockchain technology. So the technology and the regulation are actually very much aligned in this case. And so I think that in a lot of ways we're going to be able to offer solutions to the industry that are far better than what they currently have. And it should be a much easier story.
Yeah, I would just tie those two, that comment together with what Darius was saying, is the patience to be needed, even if it does seem to be obvious, is a particular challenge for those of you who decide to play in this $1.2 trillion big, fat target industry, is that comes with the territory. Because we're still seeing pushback from cloud platforms, just even though with that story, and the same dynamic will happen in insurance as well. And Jennifer, one more piece on the regulation, because I don't want to leave the life insurers out. Have you all had any conversations, or do you see any opportunities for the whole unclaimed insurance issue that now is hitting some life insurers in terms of eventually being able to handle that more efficiently or better in some future time with the blockchain setup?
I mean, I'm guessing we haven't specifically talked about how blockchain could do that, but I do think there is an opportunity, right? Because there are a lot of life claims that sit out there that go because the beneficiary doesn't know, or et cetera. So figuring out how to deal with that. There are databases today that help with that. And so yes, I think there's an opportunity to put that on a blockchain. Whether we talk to regulators, I think there's a lot that could be done there. But I do think there's a big opportunity with making that a lot more efficient process than it is today, which is pretty much these databases that are out there where you can check to see if someone has died and try to make sure that that money gets to the right person. So definitely some opportunity.
Yeah, so I don't know whether it's good news or bad news, but I've thought about this and said, I think it's going to be good when we die, we're on some blockchain somewhere, right?
Right.
That, hey, so Mike died, instead of having a piece of paper somewhere in North Carolina that's in the county vault somewhere that somebody has to dig out, they'll actually, I'll be there digitally somehow and officially.
Mm-hmm. But we still need to know who your insurer is and who your beneficiary is. So all of that information has to really be part of that whole process, right? Which today is some of the challenges we get.
Huge challenge. A lot of probate will go away, I hope.
Yep.
But if you think about it, even outside of our kind of limited point of view of how efficiently and effective we can make these processes, it comes down to being a human, right? And so if you lose a car in an accident, or if you lose a loved one, think of how interesting that possibility is if you don't have to pick up a phone to have that hard conversation with a person to explain your loss and to go through that painful process of going from loss to payment settlement. It's way more than just, can we make this more efficient and effective? Can we make this what it's supposed to be, which is just a simple promise to pay to a person upon loss?
Absolutely. Let me stop here and just honor you guys as attendees. It's hard for me to see, so I'm not waving at somebody. I'm just trying to see, show of hands, or anybody who has a question. This is going to be a unique situation where you have this kind of industry experience. Yes, sir.
So, blockchain, a lot of the stuff you spoke about is sort of like private blockchains and identity management in so a lot of what you said was about sort of identity management, privacy within existing insurance applications. There's also like the possibility of stuff being totally decentralized and having massive amounts of competition between insurers on different insurance verticals. I was wondering, what are the most likely cases that you'll see any sort of peer-to-peer insurance market without an intermediary pop up in?
Jennifer?
I can speak a little bit to that. I don't know that it'll get completely disintermediated, but I mean, because I do think, I guess it depends on what kind of insurance you're talking about. We are seeing models pop up. Most of them have been in Europe and in Asia too as well. We haven't seen as much in the US around this peer-to-peer insurance, right? So there's this idea that there's peers coming together, there's maybe some sort of small claims pool for things that can get paid for by the group, and then there's usually an insurer behind that for the larger things that are more out of the group's payment structure. So that's one model, and I think it's taking shape, and I do think that this concept of peer-to-peer with a blockchain would make that extremely efficient, because a lot of the administration of that group, maintaining those small claims could happen automatically through smart contracts, through again that ledger, and being able to see the transparency and making sure that the rules are abided to, so that when the small claims come through, there's that ability to make the payments without any doubt. I do think, though, the big insurance part of that, the bigger payments, still needs, again, like maybe if you get this huge scale, it wouldn't be there, but there are things, again, like life insurance, when someone dies, it's a bigger dollar amount, so I'm not sure how the peer-to-peer would do something like that, but it could be. I mean, I don't know if we see complete disintermediation, or at least seeing a little bit more coverage for people, which I think is really important, because we do have a big problem right now, which is people who are insured or uninsurable. And so finding a way to deal with some of that is really important when we think about the problem that creates for society when someone dies, let's just say dies, and they don't have any way to cover their family.
Captives. The other one is captives. So, in our industry, in the diamond industry, of course, we think captives is a really interesting, unfolding flower that's yet to bloom. So, that's another sort of large piece as well.
Yeah, absolutely. And I would also add catastrophe bonds.
Yeah.
In fact, I would look for any insurance product that is very financially structured, because as we've seen, and you all probably are aware of, some of the financial services sectors like securities, because of the settlement and exchange challenges and opportunities, are a little bit ahead of insurance. I see those solutions being able to be folded into what we call insurance right now very easily, and catastrophe bonds would be an example.
And in reinsurance, it would be things like international fronting would also be another one that would be a really large, interesting use case.
But I do want to take the question one place, and actually Micah and Leanne is our technicians here. Is there something about the interplay between a public and a private blockchain that you all have either experimented with, or you think there are particular challenges that you want to call out in insurance?
I mean, there's a general challenge in trying to build products for the enterprise where they're just not yet ready to trust public infrastructure for this kind of stuff. And so there's just a reality that they want to get their feet wet, they want to have control over the environment in which they're doing it. So, it's going to be a few years before we see any sort of public infrastructure projects. But, I'm very hopeful that this stuff eventually migrates to public infrastructure.
From our perspective, we're ground swelling within industry, so it's less concerning, around the architecture or the enterprise sort of level play. We certainly, when we began using both the public Bitcoin blockchain and our own private stack as well. But there's been a number of evolutions, very large incumbents now that are in the space, IBM, Intel, they're all, starting to really deliver what they've been working on under the hood in the last number of months. I think there's a place for all elements of this technology, and the real startups that are really going to understand how to marry the technology to the industry problem that actually then derives a business case out of it. So I actually think there's a place for all of them.
One area I would like to call out, actually, just from a technological point of view, is proof of work is still the gold standard of blockchain security in terms of proving out the integrity of data on the blockchain. So, and when you think about insurance, you said it's a promise to pay, but it's a promise to pay based on underlying data about an event that happened or didn't happen. So that underlying data and the integrity of that data is absolutely paramount and critical to making the system work. So I think that even today, public blockchain infrastructure can be used as a data integrity check for underlying data, and the simple way that we do this is we just take a hash of data, we record the hash on the blockchain, on the Bitcoin blockchain, or whatever proof of work is has the highest number of blocks and the most security. So it can be done today without compromising privacy or security, and we can leverage public infrastructure to increase data integrity.
That's a fantastic point, Micah, because we talk about reconciliation. Sometimes my mind, I know, goes immediately to financial reconciliation, numbers, something like that. But in insurance, you're really reconciling a set of facts. And you're saying, okay, this is what I said for Leanne's example. This is what I thought I was covering. And the person who owned it and maybe lost it or had it stolen says, well, that's not what I thought I paid you to cover. So, all of this reconciliation also has to do with, let's just figure out what the facts are. In fact, I'm kind of wondering in the legal profession, are we even going to have anything related to discovery in sometime in 50, 100 years? Because there is no discovery. There can't be any, I'm sure the lawyers will figure out some way to keep themselves busy though. We do have a question coming in, so thank you for that. Just an example, and my research deals with innovation, and one of the pieces of innovation is you have to fail to win. It gets a little uncomfortable talking about it, but any examples of, obviously not in your organizations, maybe an organization you're aware of where blockchain proof of concept actually didn't quite turn out the way that they had designed it? This is openness to anybody who'd like to answer.
So I'll answer it from our organization's perspective. We stood up the blockchain working group almost a year ago, and we haven't hit the market with anything outside of our Coinbase integration. And so let's just say we get through at least 5 or 6 ideas a month, and none of them have hit the cutting room floor yet. So it's a high rate of failure. Back to my persistence thing, we have to be persistent, and back to patience. I think one of the problems was initially we went after such disruptive use cases that the antibodies of the industry and our organization kind of came in full sweep. So I can't remember who mentioned it, but part of how we need to do this as an industry is to go after problems that haven't been solved, right?
Agreed, totally.
There are millions of problems in this industry that have yet to be solved with technology, yet we're going after the cases that have already have a path of understanding and already have a backing, and I think that's a mismatch. So one of our pivots, and I can't share specific use cases, but we clearly know there are some problems that we've struggled with since the inception of our industry, and so if blockchain fixes those, who's going to say no, right? There's no solution, right? Versus walking in and having to justify how you can do something faster, safer, more secure.
Threatened jobs.
Yeah, threatened jobs. If you can solve a problem that our industry currently has, and there are a list of them, I'll provide them in private conversations, but I think that's one of our missing kind of opportunities.
I think so. I think to be able to distill the technology to its true essence of where its brilliance lies, and then understanding that, and then applying it to an actual problem that already hasn't, or hasn't been solved before today, is where the true magic lies. And I think that there's too much that's gone on with taking the RFID tag on an object and throwing it into the blockchain and saying, there you go, now we can track goods through the supply chain. I just don't know that that's actually really doing the justice to the technology. So whether you call that a failure or not, I just think it's maybe there's too much VC money running around to test out these ideas, but you should really kick the tires on this before it even gets to a point of an MVP.
Yeah, I'll second Darius's comment on trying to find use cases that may not necessarily directly affect the existing lines of business. That seems to be a very hard road because there's way too many vested interests. So oftentimes we find more success when we're able to develop a, say, new product or a new line for a company where this doesn't really affect any existing business. It gives them a lot more freedom to be able to experiment. Another area that I'd like to call out as a sort of an interesting area, I think that there's certain things about the technology that allow for us to create totally new types of products in the insurance industry that never existed before. And I think it's also converging at a time when we're going to have more and more sensor data that we can ingest, and that's going to allow for an entirely new class of types of insurance products that just really couldn't exist before today's technology. So I would say that those are really exciting areas for exploration. And you could probably get a lot more traction even in the enterprise with those ideas because they are greenfield and there's a lot less vested interest.
Fantastic insights. So we're almost up to the end of our time, so I'm going to do a little word association test here. So I didn't tell my panelists I was going to do this. So when you think of blockchain, when you think about this area, what word comes to mind? And for me, it's opportunity. Let's just go down in order. What word comes to mind? One word would you distill it to?
In order?
Sure. Let's start with you.
Speed.
Speed, okay.
Dominoes comes to mind for me. There's a domino effect that's clearly entrenched, but also when you think about encryption, when two sixes come together on binding the data, it's a domino effect in terms of writing the data. So domino.
I had speed too, so, because I really do think speed is important, but I also think it's back to the efficiency play, at least in the insurance space that I play in, so I'll go with efficiency.
I'm going to go with truth.
Truth. How can you go wrong ending a session on truth, right? Anyway, thanks to the panelists, and we give them a round of applause.